All right, folks, here we are on Trading Up. We've got a familiar face in the house. We've got Scott Welsh back on the show. He's been on it a couple of times before. Last time had just placed second in the Forex Trading World Cup, and that was about 2 years ago, almost to the date of this to today's date. So welcome back to the show, Scott.
I know it doesn't seem like that long. I miss talking to you, so I'm glad to be back.
Yeah, it doesn't seem that long. It doesn't. I think that whole pandemic thing just like shrunk time for everyone.
I think we're in time warp.
Yeah, so you place second, which is a phenomenal achievement for the Forex Trading World Cup. You then, I found out just before, have had another crack at it in the past year for the next one. How did that go, and what learnings did you take from that second attempt?
I don't know why this popped in my head, but there's a scene from an old movie, Glory, with a young Denzel Washington, and they're in a tent, and it's a Civil War film, and they're in a tent, and people are saying, what'd you do? And these are down on the luck people. They're soldiers, coming from the country, whatever. And Denzel, they said, what'd you do? He goes, well, I ran for president. And everyone kind of said, what? He goes, didn't win, though. But that's what that question reminds me. I did run last year. I did run it back last year. Through March, I think I was in the top 5 at one point. Right. And then just didn't happen. It just faded. I stayed very flatlined the rest of the year, faded a little bit at the end, made money, but alas, I did not get the top 5. I was so sad. I cried for a month.
And did you use the same strategies and stuff you'd used in the prior one when you placed second, or was it different?
No, I had a brand new robot that I was so excited about. The testing on it was great. It had been doing well right before 2022 started. I had never in any of my systems used any sort of money management. So meaning one trade, you're in it to the end. Don't take any off, don't scale any back, don't lag in or leg in. So this one actually, scaled out a little bit, and it scaled out when you won, and it scaled out a little bit when you lost. And I was just so excited about it because it, as you might expect, it eliminates drawdown, or at least doesn't eliminate, but it cuts it down quite a bit. So the ones I use for the contest that I did well, big stop losses, and you just let it run, and you can take bigger losses, but you can also get huge wins. And of course, when you start scaling out, then you take a little bit here, you take a little bit here. Yes, your wins are smaller, but a trade that turns around, now I made a little bit of money. I was just excited about it. And for 3 months, it was doing okay. But it turned out that was not the one to use in 2022 for whatever reason. Bank of Japan started messing around with the pound yen. So did the Bank of England, for that matter. And scaling out and not going for big wins, it didn't work that great because it turned twisty. So I never really got a big win, and I got a bunch of smaller little wins, and I got pecked out a little bit and ended up. So I would have done better with another strategy. I actually might have contended, but I wanted to trade this so bad because I loved how it traded, and it just didn't do as well. I made a joke on my free newsletter or whatever. I had 14 strategies at that point that I loved. And the one I picked in the contest was 14 of my 14.
Number 14. I picked
the absolute worst one. So yes, I beat the stock market. I made money, nothing to cry about. But it was tough to see some of my other strategies do very well. And then I picked the new one that was just
Okay, well, what we're going to do today, folks, is we're actually going to sort of dive into a lot of what Scott does around picking these strategies, finding them. He's got 14 of them, as you've heard. Now, if you are not an algo trader and you're thinking, I'm going to turn this off, don't turn it off, because there will be a whole bunch of stuff in here that you'll actually probably pick up and find that it's going to be useful for your manual trading, for your statistical stuff, analyzing what you do and all that sort of stuff. So even though we are going to dive deep, it is going to be very, very useful, and I promise you that much. So to start off with, I've watched a few of your videos recently and seen how you go about selecting a strategy that is something you're going to possibly, move forward into the next phase. Now, you've got a unique method whereby you just run it, and if it works without any tweaking, you're just going to, and it works across a number of different currency pairs, you're going to run with it, right? Is this something that you still do? I mean, is this your sort of approach, or can you explain your approach now?
It's pretty similar, yes. There's only one minor change that I've made lately, and I've written a lot about it, maybe even talked about it too on the YouTube channel. But that's you're exactly right. I like to find general principles that are timeless. So you're looking at trend following, right? Trend following is the most tested. We have trend following data going back 500 to 1200 years, right? Where if you buy something that goes up, it seems to work. And all of that research is better than buy and hold on any way you look at it. Anyone who likes buy and hold, just do a little research. You'll find that, and it's some sort of trend following beats it by 3 to 1, depending on the research you're looking at. Okay. So I like to start with that. Trend following. I want to follow trends somehow. And what I like to do is once I go through a strategy that follows trends, that gets big targets, I don't like to mess with it at all. I want that to trade for years, literally, for years and years and years. And I used to then take those settings and put them across a bunch of different currency pairs, or even not currency pairs, in the stocks or futures, the same concepts. And I wanted to see proof of concept, generally speaking. But now recently, I've gotten really tired of putting it on a bunch of different currency pairs. My feeling is if you're going to be a trend follower, put it on something that trends. And I didn't know why I was messing around with the Euro Chef, for example, when the pound yen was literally 20, 30, 50 times better. So right now, I don't look at other currency pairs. I mean, barely. I look at the euro yen sometimes, look at the euro dollar, but my whole life and all my money right now in Forex is one thing, something that trends, and that's the pound yen.
Right. So, because I was going to ask the question, because Forex is typically mean reverting, right? So it doesn't typically trend because it's a current, their currencies. Now,
right.
So you've sort of distilled it down to just trading one market in the Forex space.
Yeah, and I've tested them all, and you can see the deep dive in the rabbit hole you can go into. You got at least 21 to 30 that are viable pairs to mess around with. I mean, you start testing them all, and then okay, well, I want this to work over there, but I want this to work over here. And finally, I just got tired. I'm like, even that going back in the contest in 2020. As time went on, I'm like, why am I wasting my time with other things other than the pound yen? Like, you can trade just that, or I could trade 5, 10, 15 versions of that. So I'm diversifying in a way, but I'm diversifying on something that actually moves. It's no different than the stock market. If you want stuff that move, how about looking at something called Tesla, perhaps, right? Why don't you put a trend following strategy on Tesla rather than something else that just a dividend stock, for example? Not there's anything wrong with that. So that's a long way of saying I like my strategy to work simply and be timeless, but right now I'm focused just on the pound yen.
So does that mean, because I mean, in the video I saw, you had like 15 or 20 odd pairs that you were testing against, and you'd found a strategy that worked across most of them. It made money across most of them across maybe 10 years or something like that. Now, with that approach, how do you sort of bring that back to the pound yen? Are you just looking for something that works on the pound yen now, and you've scrapped all the other pairs? Is that what's happened?
You hit it exactly. I used to run, I got some software that would run tests across many, many pairs. And so I'd run an idea and I'd run our cost 20. Oh, look at the results. Okay, great. And then I did it again and again and again. Well, guess what happened? I think you know where we're going with this. And every single test, pound yen was winning, and not by a little, by a lot. I'm like, oh, look at this nice balanced portfolio of currency pairs. But the reason I'm making money is really due to one thing. And so I just got, after years and years, literally, of testing all the pairs, we're talking about in the last, I don't know, 12, 14, 16 months, maybe less than that, but I don't look anymore. What I do now is take an idea and I run it across different time frames of the pound yen, but I very rarely look at anything else now in Forex testing.
So it's very much sort of like saying you've essentially said every Forex market, or virtually every Forex market, is different, and you're just going to look at one market which has its own unique style, but you'll find the same patterns across the different timeframes for that particular market. Does that hold true in terms of, like, you do see the same pattern occurring, and with you can, if you're testing on a 4 hour, you can see the same result or a similar result on a 1 hour, or or an 8 hour or something like that?
Well, it's interesting. I know exactly where you're going, and I don't think that's exactly what I do, but the results are exactly what you say. For example, I trade and test and update results and all that stuff on 15, 1 hour, 4 hour, and daily. I've got maybe 40 systems that, I mean, I've really spent time on that I track. I don't trade them all, but I track them and I release that to members and so forth. And once a year, I update that, whatever. So I don't look for a pattern, like say a certain pattern on the 15 and then do the same pattern on the 4 hour, for example. But I will trade a breakout strategy that starts on the 15, but goes for a massive profit target. And I will trade a breakout on the 4 hour that also goes for a massive profit target. And then after 20 years of testing, they kind of end up the same, even though it's not exactly the same pattern. But it's surprising that if you're trying to follow the trend and going for big wins, you'll find some similarities that no matter where you start, it's just different ways to get to that big win, whether you're breaking out on a 4 hour chart, 15-minute chart, or daily chart.
Okay. And so you're like, when you're coming up with these, because there's a big thing around, keeping your strategies robust, especially around algo trading, and not curve fitting, not over optimizing them.
Mm-hmm.
I mean, the irony is, like, how does this not sort of factor into anyone who's manual trading as well? Because it should, in theory. So how do you sort of, when you're testing out a strategy concept, be it a breakout or something, what do you do to make sure you don't get a curve fit / non-robust output?
And that's the question, right? That's the big fear. That I get emails on that all the time. I'm worried. Traders are so worried. We're such a worrisome bunch, right?
Yeah.
Here's how I combat it personally. Number one, you take a timeless concept that's always going to be true. So if trends exist, now I guess there could come a day where the pound yen doesn't trend anymore. Okay. I mean, we've gone 20 years or more and it's still trending. So whatever. When is Apple going to stop trending? I mean, it's still trending since 2004. But anyway, so yes, if you take a timeless concept, your chances of it working next year are pretty good, because for my system to stop working, or at least producing profit, not going to win every trade, blah, 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 but the pound yen would have to go into a range and then never leave. Right. That would be a problem. Then I'd have to find something else that trends. I don't know what would cause that. It's been in a range lately. The Bank in Japan is really doing some shenanigans, and it stays in a range. But guess what? What happens when it stays in a range? It breaks out. So number one, start with a timeless concept. Number two is I don't ever take the best results. I test for consistency. I don't test for profit. So what I want to see is I want to look at the 20-year back test, and I want to say, I don't want 5 losing years and then 3 massive years. And I will turn down the most profit over and over and over again, as opposed to this worked in 2008, this worked in 2009, this worked in 2016, which was the crazy pound Brexit year, British pound Brexit year. Did it trade 2018? Did it 2020? Now we have an anomaly. And now 2022 with the first bearish market that some people have ever seen. And all I want to see is some consistency. I don't need it to make $1 million. So that's my other one. And then my third one is, and it's the best back testing method ever invented. And we're going to reveal it here with just me and you. And that is test a strategy and then leave it alone and just watch it. That's it. Just watch it trade for a year. I guarantee you'll find out, oh, that's turned ugly in a hurry, or, hey, it's holding up. I mean, when I write my newsletter, I will start talking about strategies that could be like 6 or 8 years old, and they've just been sitting on my computer doing nothing. And then I'll be embarrassed because they're just doing incredibly good.
So when you say that, you mean so you'll basically test a strategy, go, okay, this one made money out of 20 years. It made money out like 17 of them. Mm-hmm. So, and I don't care how much money it made, but it just made money every year for 17 years. I then chuck that on a VPS and then hit play and just let it run, or a dedicated.
You can do it
server
that way.
Yeah.
And I trade it, and I'm going to try to trade more and more strategies live, or I'm literally going through and updating it every month on a back tester. Now people will freak out and say, oh, back testing's not real life. Well, for me, it always has been real life. I don't I don't know why. If you have 99% data and you don't have a very complicated strategy, my tested results have always almost exactly mirrored my real life. So I can either just let it run in the background, exactly like you said, which I do on TradeStation and I do on MT4 sometimes too. Or I'm just constantly testing and constantly looking at it and how did it do and how did it do. So either way, either one of those is a great way to do it, and then just check back in on it 6 months, 1 month.
Okay, right. So you might just you develop the strategy, say in June, and then you might go back and test it on the data from June till December or January, and go, okay, well that's 6 months. How did it go over that 6 month period? Oh, it kept making money. Yeah. At what point would you say, let's now I actually want to put real capital behind it and stuff like that? So, or you have enough confidence that it would succeed going even further forward?
I have two answers to that. Number one is, and I've also written about it, that my new philosophy is building more and more. I want to be very focused, and I still am to a point. But there was an entrepreneur, 100 millionaire or whatever, talking about, what strategies does he use to acquire clients? And the answer was all of them. Like, do all the tactics, do all of them. And that's where I'm heading. Every single good idea, I want to be trading live. That's my goal. So my best right now, I have 5 of my best ideas. I would love to get that, as long as it's reasonable and I don't start losing track of stuff. I would like to start trading more and more and more and more. So that's one way just to check up on it. And then I don't remember my second answer. So there you go.
Okay. Well, well, another question I was going to ask was like, so if you're not looking at the one that makes the most money, what metrics are you looking at in terms of, finding a strategy then going, okay,
and what would get me to switch? Yeah, exactly. That was just part 2. Well, here's the thing. I've got on my site, I'm starting to track now all sorts of robots so people can play along. Every month I go in and I go to my data, which I trust, and I update it every month so we can all watch along together. They can watch a strategy burn out, flame out right in front of their very eyes, or they can watch something that's good. All right. And I give away, many of them are free. I give away all the settings because, we're all in this together. I want us to make money. So I'm looking at these strategies and they just destroy, in the contest year. I've got these, let's call them old school, and they're at least 8 years old, I think 6 to 8 years old. They're based on the old turtles. They're just breakout. They're so simple, and they're just break. I haven't done a thing to them in years, and they are just destroying for 2 years straight now, still going. It's unbelievable. So why am I not trading them? Well, the drawdown historically is bigger than what I'm trading now. So in my mind, I'm like, I see you old school. I understand. But the ones I have right now, their drawdown is less. It's going to be less painful because when you're trading simple old strategies, they're going to draw down. You're going to have a losing year. My tested portfolio right now doesn't have any losing years, but it has barely winning years. So, practically break even years, but no actual red years. So right now, it would take my strategies to have a similar drawdown, to have a losing year just like the old school, or something along those lines, or maybe a year or 2 more of that old school type of robot doing well. But until the drawdown is equal, I'm not super tempted to switch. But every day I feel like that's a dumb decision. Every day I feel like I should be trading them.
Right. Okay. And in terms of drawdown and keeping your drawdown manageable across, let's say, 14 strategies or whatever you're trading live with now, how do you do that? What's your sort of methodology?
Well, here's the only, the only bad part of trading right now for me is living in the United States. I love the United States. The United States is great in many, many ways. But guess what? The United States does not allow you to trade more than 1 pound-yen strategy in the same account. Oh, so really? If I have 5 that I like, I have to have 5 different VPSs, right? Or 1 VPS, but 5 different charts. So I have 5 different instruments. And so if I go to 10, that's 10 different MT4s running. And if I go to 20, that's 20 different. So the drawdown, then I'd have to go, one drawdown here, drawdown here, drawdown here. Like it's not in one account. So I would just basically say, you know, they all started with 10,000. I'd say, well, you know, they're down. That one's down 1,000. That one's up 3,000. That whatever. So, and then I'd have to aggregate that all the way across. So it's more complicated than I wish it was. That's probably prevented me from trading 30, you know, right now. But that's how I do it. Honestly, I just set up 5 and I just watch them and I add them up.
And what about correlation in terms of, like, you know, with one pair being the sole focus? I mean, obviously, if something happens with the JPY, as you mentioned before, and you know, I think something happened yesterday with it, where there was an announcement and the price just spiked rapidly in about a minute. What happens? How do you sort of account for that?
And it's something I used to worry about all the time because, you know, why it's not very diversified, whatever. But this is what and it's just the math. It doesn't make sense to me necessarily, but all 5 of my strategies are trend following in nature. A couple use indicators and some just use breakouts of some form or another, right? You would think that those would be so correlated and that the drawdowns would exaggerate in bad times and would explode in good times. And that's just trend following, and that would be fine. But surprisingly enough, because I guess they're just different enough, and there are different time frames, so I have diversified across that. But they work together very well. Like, they aren't correlated that much. You know, I looked at the 5 earlier today, and they're doing different things, even though they're all based on following trends and big targets. So I have yet to see any problem with that, but my mind says I should be having problems with that, but the math doesn't say it, and I haven't experienced it yet. So I guess we'll have to meet again, and I'll tell you.
Yeah. So what about? I mean, it sort of brings me to think about time frame. I mean, have you got strategies running on different time frames within JPY?
Yeah. 15, which is weird because a 15-minute chart seems like that's a fast-moving, noisy, but it's going for breakouts and just happens to be on a 15-minute chart. So it's a little bit, if you do it on an hour chart, maybe the robot looks at it too late. If you do it on a 4-hour chart, but I have 4-hour and day, like I said. So, but yeah, there are different time frames from 50 or 15, sorry. 1, 2, 3, and then at 1-hour chart. Well, that might not be true. 15. Yeah, 15 and 1 hour. Sorry. Yeah, 15 and 1 hour.
So even though you test on 4-hour and daily, most of your trades or strategies are based on 15 and 1 hour.
Yeah, and I'm mad about it because the 4-hour and dailies work great, but the drawdowns are a little bit bigger, so I haven't chosen them yet.
Okay. And what about you mentioned indicators there. So how many out of all your strategies are using indicators, and are they solely based on indicators or a bit of both? What's the matrix or mix look like?
Yeah, 2 of them are strictly indicators. An indicator says this, and I get in. That's it. Then 3 of them are based on breakouts. If it goes above the high, a previous high, then it gets in. So 3 are indicator, or 2 are indicator based, and 3 are breakout based.
And are the indicator based ones better than the breakouts, or does it matter?
I think about that all the time. Initially, the breakout ones were better. What does better mean? A little bit more profit, little less drawdown. But the indicator ones, since 2022 started, they've been great, which I wouldn't have expected that either. So right now, indicators are doing, we're talking about right now, last 3-4 months, indicators are doing better. But overall, by the slimmest of margins, the price action breakouts are a little bit better when you look at profit and drawdown.
And when you come up with like a theory or a concept, like, I'm going to do this, a breakout, and this is what it's going to, you know, this is how the strategy is going to work. These are the rules. My stop loss is going to go here, or I'm going to get out when it goes here. I'm going to take profit at this point. Do you build variables into your robots so that you can, you know, well, maybe my stop loss needs to be, you know, could be, let's say it's 100 pips, could be 150 pips, could be 200. Would you test all those different variations, or would you just say, I'm going into this with a stop loss of, you know, 10 ATR or whatever it is, and then a take profit is going to exit when it crosses the moving average? Very simple kind of strategy, but that kind of thing. Or have you got, or are you just, you know, coming up with the theory and then testing out variations of the stop loss, the entry, the take profit, filters, and that sort of thing?
The first time I came up with this was 2018, 2019, that had led to what I'm trading today. I've been trading it since then, that time period too. It started with all sorts of, I mean, I tested everything, back then I thought more is better. And I continued to think that. And then when I first tested a breakout, just breaking above the high, it worked so well. I mean, worked phenomenally. But yes, the winning percentage again is not very high. But as far as long-term profit and long-term viability, it was so great. I tested stop losses all the way, from 50 pips up to 1,000 pips, and I would test profit targets too. At first, I didn't want to use profit targets because trend followers don't want you to. But in Forex, it's perfectly fine to use a profit target. So I do a small target, do a big target. And what I found is when you're using a trending instrument, pound yen, or even if you test the Bitcoin ETF, hard to test for me anyway. I don't have Bitcoin data for the whole thing, but or Apple or something like that. You kind of, if you just put maybe 3 to 1, 4 to 1, I mean, you can go down to 2 to 1, but if you generally have a big profit target that's bigger than your stop, which is, I mean, that's as old as time. I mean, how many times have we heard that? Then you don't have to be too specific. 100 pips, 150 pips, 200 pips. Honestly, if you're going for 300 or 400 pips on your target, they're all pretty good. Like when I run a test, for example, and you get results, I'll see profitability. I mean, for 30, 50, 40, like they're all profitable. Like you can almost throw a dart and pick one. And I end up just trying to pick one with a drawdown that I like. But when you're going for big profit targets and using trend following strategies, like you don't have to, it's gotten rid of my pickiness, to say the least. You don't have to be so precise.
And what about like sample size of trades? I mean, how many trades are you looking at over, let's say, for example, a year to give you confidence that, this is going to be something I'd actually use? I'm guessing like if you get one trade a year and you're doing a 20-year test, you've got 20 trades, your confidence is going to be quite low. So, I mean, what's your number?
What's my number? Well, honestly, though, if we're going to switch over and talk about stocks, I would take 20 to 50 trades for sure. Trading a daily or a weekly system based on a trend following methodology that made sense with a big profit target, 100% I would take that easily. But in the Forex market and generally in testing, I love 500 trades. I love that. Generally, my strategies show between 500 and 1,200 trades lifetime. So I'm perfectly fine with that. I found that does translate into the real world. But again, if we're talking about a different instrument, you could talk me into 20 to 50 trades on some things, right, if they're long term.
Okay, so 500 is the magic number. And what about things like time of day of the week? Do you go into the detail around testing that and excluding days, excluding hours, that sort of thing?
Yeah, done all of that. Done all of that till my eyeballs got blurry. There is something in the Forex market about trading when the Americans trade for some reason. If the Americans are moving between like 9:30 and then they start petering out around 12. There are systems that I've built just for the New York Open. It seems that that's when people get excited about who knows what, even though it's been going 24 hours a day and we've got London traders, we've got Asia traders. I mean, all of those are big traders. I get it, but there's something about the chart that happens before noon Eastern. It's crazy. But I also have systems that just trade whenever the signal comes and it doesn't matter. So I used to have a bias for maybe trying to trade when the Americans trade or New York, but I don't anymore. I'm fine with a signal now, especially if you're using an indicator. Just when that indicator fires, that's fine with me.
And would you I suppose, go into it coming up with a system that is going to trade the New York session versus coming up with a concept and then going, let's just see if it works better in New York, London, Asia, or that sort of thing?
Yeah, I've tried all the different types of days for going for big targets, and pre-noon works the best for me. And now, again, it may not be true for someone else. All right. I'm not saying it's the right and wrong. But yeah, I went into that. I figured out that concept, trading when New York trades. This was, several years ago, maybe 3-4 years ago. And now I look for it. I'm like, let's see. But I found that, especially if you're using a trend following instrument like the pound yen, again, it doesn't matter. So yeah, I look for it, but it's not mandatory anymore. I've done a lot more testing lately, and that's not based on the New York Open. And it's also been good, especially when you get into 4-hour and daily. You don't necessarily need to do that anymore.
And what about day of week? Are you sort of seeing, if Monday's bad, do I just turn off Monday on that particular strategy?
I used to care about that so much, and I don't anymore. I just don't want to miss a trend. So I'm in Monday to Sunday, or Sunday, I guess Sunday to Friday would be a better way to put that. No, I have excluded. I made a counter trend strategy years ago, almost a decade ago, that excluded a day. I think it was Tuesday, but it got rid of a day of the week. I've said, well, Friday's terrible because that's for the weekend. And then Monday it feels psychologically like Monday stinks. But then you look at the numbers and Monday doesn't stink, at least in my system. So no, I don't exclude anything. I have done that though quite a bit, but I don't anymore.
And what about like order types? Are you setting limit orders, stop orders, or just getting in at the market?
I would love more than anything to use limit orders. But I just don't, I can't make the back testing show up in real life. I've tried it. I've built one or two, and I would traded it live with a small size. Immediately, the tester took it and the real life didn't. So it's like, I don't know what I'm going to get. So if I could, or if I was a discretionary trader, I'd use limit orders. I love them to death, but all of my robots now just get in at the market.
Okay, so in at the market, right? So limit orders and penny orders as a whole, stop or limit are. You got that extra decision to make, which I find is an issue, where you've got to go, when do I cancel the order?
Yeah.
Like, what point do you cancel the order? Because it's like, well, how long's the setup valid for? So then you got all these things you got to think about. It's such a pain. Right. So what about? I mean, I don't know if we got the answer to this one around the metric that you like the most to determine whether or not this is a strategy you'll go ahead with. Have you got like something like profit factor or another kind of metric that you use?
Profit factor is great. Perfectly fine to use that. I've used, if you have a lot of testing, I like max profit divided by max drawdown. You get a number. I like that. But that's not really relevant if you're looking at a shorter term, like just trading the past couple of years, because you never know. I mean, you'd have to have a lot of data to use that, which, I generally test long term. Honestly, what I like is what are the yearly returns over the past 20 years? And I just like to look at that. I'm very long term, at least in my thinking. So I don't really care what today does or next month or even the next 6 months. But I would like to have confidence that, at the end of every 12-month period, I'm doing okay. So that's my favorite, actually. But profit factor, 100% is excellent to use. I've found, in the 1.4, I've seen strategies work for a long time at 1.2, 1.3 on a profit factor. 1.4 is great. Higher is better, as most people will tell you. But some stock strategies, I've seen profit factors of 8, it's whatever, and they're fine too. But generally speaking, I'm just looking at the drawdown distribution. That's my favorite.
Right. And what about, like, you mentioned, yearly return. What would be a sort of, I want it to beat this much per year to give me confidence that, like, I'm going to keep running the spot. What's the minimum sort of yearly return you want to see, or the minimum average, I suppose?
Yeah, boy, that's a tough one, because I used to be so scared of everything that, I did I would look at my max drawdown first because I was so scared and like, oh, the max drawdown is $10,000. So I better trade this on a $30,000 account. Because what if I draw down 10? At least I'm safe that way. And then you make 4 pennies. You have to take on some risk.
Yeah.
I don't want to say, but I'm going to say, I would like to see the potential for 100% year in the testing. Now, that comes with a big drawdown. So please, everybody, please be careful. That means that I'm willing to accept a 50% drawdown, or, an outrageous amount of drawdown, which most people can't take 1% drawdown, right? But in my testing, I would like to see the ability to double my money at least once. Not every year, of course, not every year. But I'd like to have the potential of having, if I have a banner year, I'd love to see it double. So that's where I start. That doesn't, I can take the size down from there, but in my testing, that's what I like to see.
And do you have like a strategy that's sort of been one that's performed the best for you over the long term, or is it just a portfolio of them?
The best, and we may have even talked about it, it's been years past, the best strategy I've ever tested is called the Hornet. And I spent 2,500 hours developing it. It was my first real attempt at it. That's still by far my favorite strategy, and I do not trade it anymore because I can't trade it in the US. The spreads are just too wild. It goes for a very small profit target, and the 15-minute chart uses the RSI indicator. The win percentage is in the 70-80%. If it traded like it tested with no slippage, right? No 5 p.m. Eastern where the spreads go to 20-30 pips. No Sunday night where I'm trying to get out and a winner turns into a loser because the spreads are 20-30 pips. If it just traded the way it's supposed to trade, I'm going to get upset, Cam. That's by far. And it was a negative risk to reward. You know, it's 14 pips and a 50 pip stop. But that has continued to work. It's not perfect, but it's continued to work on my testing. But I haven't traded it live in years because I just can't. Like, there's no way. Winners turn it like, oh, I got 15 pips. No, I didn't. I had a loser. I mean, I can't trust that. So
yeah,
that's my favorite. My second favorite is what I do now. Huge targets, trend following, any sort of breakout trend following, or any sort of indicator that goes for big targets. I love them, and I'm going to love them for the rest of my life, I think.
And I suppose, does that mean that you can sort of, with the trend following stuff, you can avoid having to worry about, the slippage and the spread and the cost of the trade, because you're in a trade for much longer if you're winning, and it just soaks up any kind of, discrepancy that the broker's putting on you.
Yeah, I had so many bad hours of worrying about spread. I had programmers that are the best programmers I could find help me and build in slippage and don't get out if the slippage is this and that, and I could not make it work. Nobody's fault. The market was just too wild. It didn't happen when I was at TradeStation. I don't know why. Years ago, TradeStation had Forex. It doesn't anymore. I made 100%, over 100% in a year with this robot and TradeStation. Everything was fine. I had no problems. As soon as I couldn't use TradeStation's broker, I don't know if it was Gain. I forget who it was. But since then, it's just not been feasible. But yes, going trend following, I don't ever look at slippage ever.
Yeah.
I mean, it just doesn't come into play.
And if you had to sort of, say you had your theory, you built your strategy, and you're now going to go and test it, what's your process around, like, start to finish? Here's the first thing I'm going to do. Here's the next thing. Here's the next thing. Here's the next thing, to the point where you're either happy with, the results, or you bin it. And what's the sort of, geez, I'm asking so many questions here. What's the sort of decision-making factor around, I'm going to bin it versus I'm going to keep it?
Well, I've got, I'm a serial tester. I think you know exactly what I mean. I think you're along those same lines.
Yeah.
I have so many now of different versions of trend following, different versions of all sorts of things. I mean, sitting on my computer, there's so many that right now I can just go back and cycle through old ones over and over again, like we talked about earlier, and don't even have to come up with any ideas. I just let a strategy sit for 5 years and then come back and see how it's doing. Like, oh, all right, well, that worked for 5 years. Maybe I should incorporate that. I do so much of my learning based on what happened in the past and how I can update that here. So my process to sit down for just get a new strategy is going to be an old strategy. That's number one. That's the first thing I do, is do something I did a bunch of years ago and forgot about, or just have been ignoring because I'm only one person and I'm dumb. My second would be, I'm very idea based now, whereas before I was much more on the data mining side, where I don't know what I want, but I'm going to start testing and I will find something. I will find a pattern. Now it would be an idea. Okay, I want to use this indicator. I want to go for 3-to-1 ratio. And then I would say, well, what if I added this filter, or what if I used even, multiple time for, that sort of thing. But I would start right now. If I were to start one tomorrow, I think, okay, find me something that trends, give me a big profit target. Now, how do I want to enter? Well, I want to enter this way. And then I just go. And I don't even test to the target. I would have an arbitrary target, 400 pips and 200 pip stop, for example, and then just go. And then start tweaking. Yeah, my testing has calmed down dramatically. I still do a ton, but it's so much simpler now because I have the old things to build off of, and I'm very idea based now.
And so when you say start tweaking, what kind of tweaking would you be doing? Just, would you be trying to get to that point where you see that double digit, or account double in the 100% growth, should I say, in the year in one of the tests? Is that what you're looking for?
Yeah, well, I'd like to see that. And then, but I don't want to see, I don't want, let's say it has a $10,000 year and is a hypothetical $10,000 account. Well, I don't want to see a $10,000 or $12,000 drawdown, something even more than my account. So I would look at that too. I'm not just looking at the wins. I would look at, are there any really big red years? But that's what I would look at. I'd say, okay, so I start with 400 and 200 and I do a breakout, a new indicator, Keltner channel, something like that. Okay, how does it work out? Okay, well, in the pound yen, which is where I look first, second, third, fourth, and fifth, maybe euro yen after that, or even whatever. Then I would say, okay, how does it go? And I'd look at the 20-year back test. And I'd say, oh, well, it's got a little bit of a drawdown in 2012. So how about if the stop loss isn't 200? What if it's 150? Right. And then I run it that way, but it's more, I'm looking at it, I'm just curious. But I don't really want to get away from the framework of big profit target, big stop. So I don't stray too far, if that makes sense. Is that explainable or understandable?
Yeah, I think I understand that. And at what point would you sort of discard or stop working on that particular strategy? When's it sort of, run its course and you've gone, well, I can't get this thing to do anything now. So I'm done.
Yeah. Too many losing years, probably, just
right.
Or one just massively losing years. I can even handle a small losing year, but I'm just thinking about, okay, there's no way I could live through this. There's no way I could live through a drawdown that big. You're going to see drawdowns during the year, even in a winning year. You're going to see a month or 2 or 3 drawdowns, but something that's just outrageously large. I'm like, I have other things that don't draw down that big. So you're out of here, buddy.
Yeah, and what about like if somebody, I suppose to wrap up the show here, because I've asked a lot of questions. If somebody was going to start down this road and wanted to like get into this stuff, what would be your recommended course of action?
We're talking about Forex, or we're talking about
something I'm talking about just, I suppose looking to automate something and find an automated solution for what their manual trading strategy or their manual trading ideas, or just their ideas in general. They've got they sort of know how the market works, and they're thinking, well, I can't actually execute on half of these things because I just don't have the time. So if I have a robot, then I've got a robot doing the work for me, and I can get that idea done and see if it actually can just make money whilst I'm doing my normal manual trading. That kind of person who's like, I want to delve in here and I don't know where to, what steps would I need to take?
Well, a couple things. Number one is highly, highly recommend robot trading. I fell in love with robot trading 2012 and never looked back. I have branched out and opened accounts for discretionary trading, but that's just very recent. I went a decade pretty much with not worrying about anything discretionary. So definitely worth your while, number one. Number two is, how do I get started? Well, you'd have to find someone you trust. I would go buy a robot. Of course, I sell robots, so that's disingenuous to a point. But I post results on my site. So find someplace something like, what I'm trying to do and trying to be transparent, and look at the results for a month, 2 months, or even a year. Find something that, you can trust, that someone's trying to do honestly and not trying to trick you and make a sale, and then say, okay, well, this was automated. It's done this. Oh, look, it does lose, but in the end, it does, the big profit targets make up for it. And then consider with small trade size, getting someone else's and trying it. The other way, though, if that's still too scary, you can go on the big time frames, whether it's Forex or anything else. Go to I give away free strategies in my newsletter all the time that are based on 4-hour and daily. You don't need a robot to trade them. Like, you can see them coming a mile away and it wouldn't be any trouble at all. So take a robot, but it's so easy to trade because some of the rules, I'm still shocked at how simple the rules can be to make money if you're trend following. And then just honestly, you say, okay, well, I'm going to trade a 4-hour chart live. It trades once a week or maybe once every other week. And then, okay, I did it myself. Let's automate it. So those two, get someone that you trust and try it, or take something long-term that you can handle easily and then just automate it from there.
Brilliant. Awesome. Well, look, hopefully folks here got a ton of value out of this. I know I did, and can apply some of this either to your manual trading, or if you are an auto trader, then you can apply it to that. Or if you're even looking at getting into it, you know what to do now. So, Scott, what's the best way for the traders to get hold of you?
ScottWelshStrategies.com. Please come. And I do have a YouTube channel that's Scott Welsh Strategies. So yeah, either way, free stuff on both. So you can go either place.
Guys, go and check that out. And we also did record, I mean, you've been on the show a couple of times already, so you can go and check those previous interviews out if you want to learn a bit more about Scott and what he's done. And I think we even did a video last time where we came up with strategy, and I think you even did a challenge as well. You did one of the back testing challenge.
Yeah. We did all sorts of stuff.
Yeah. So look, a big thank you to Scott for sharing with us today. Everything we've discussed here, along with all those links, are in the show notes. To find them, simply search for Scott in the search box on tradingnut.com. Until next time, wish all my listeners trading happiness and success. That's a wrap, mate. Awesome.
Okay.